We might be on the verge of the biggest crypto bull market in history. Institutions are buying like never before. And in this podcast, I invited my friend Lorenzo, and we're going to talk about some of the biggest wealth building opportunities, but also the biggest risks and pitfalls that you should absolutely avoid in this crypto bull market, at least if your goal is to realize maximum gains. And that's of course what everyone wants. So if you haven't seen the podcast yet, a few months ago, Lorenzo and I recorded the podcast for 1.5 hours. We went really into depth about everything that we saw happening in the market, and people really loved it. So that's why we decided to do another one, because so much has happened and I want you guys to be informed. So Lorenzo, since we had the previous podcast, so much has happened. My perspective, I'm really curious to hear your perspective right now on the next year and what we have ahead.
Well, first of all, thank you, Mitchell, once again. It has been an interesting couple of months. I think a lot of things that we discussed actually came to fruition.
Yeah.
That was not really a surprise. However, it's the time where suddenly a lot more people are getting interested.
Yeah.
When you're looking at Google Trends, we're back on track. We're reaching new highs again. So it's a very interesting state of mind, but it also comes with some danger for a lot of new people, new traders or new investors. So yeah, I think we can help a lot of people out today.
Yeah, totally true. I absolutely recognize what you're saying. My DM inbox, my WhatsApp messages, again, are starting to flood with people that are getting interested and excited about crypto. Then let's answer one really important question. There is a sort of belief amongst a group of people that they've already missed the boat. Do you think it's too late now that Bitcoin is almost at 100K? Or do you think there's still a lot more opportunities for people in this market?
There are a lot of opportunities in this market, but there is a big difference between being a investor and being a trader. A lot of people in the space that want to enter the market right now, suddenly out of nowhere want to become the best crypto trader of the world because they see their friends making a bunch of money.
Yeah.
The problem with that is that you had 3 years to train yourself already beforehand when you were not that interested. So now suddenly market is coming back, interest is coming back. But this is the moment when also you're going to see a lot of people lose a lot of money by trading with leverage, for example, not knowing how to properly use leverage in their advantage, whether if they just bought and held, they would end up with the same result, maybe even better than ever before. So you had all the time in the world to become invested somehow, either through trading or through investing. But I do believe that trying to learn how to trade in a bull market can set you up for failure in the long run.
Yeah.
That's my personal opinion, because
You don't need to be a genius to make money in this market.
exactly. If you start making money and everything comes in your way and everything just goes up, it's easy, right? Everyone can make a bunch of money.
Yeah.
But the problem is, what kind of consequences will that have once the bull run stops, right? We have seen last cycle, especially, how many people actually lost their money.
Yeah, 95% probably or more.
Making a bunch of money, losing that plus more.
Yeah.
It's not uncommon. So if you are a new individual and you want to get familiar with the markets, learn about investing, learn how to invest first, get familiar before going deeper and, start trading like everyone else is showing you how to make a bunch of quick money.
Yeah, I think that's a very important point. I believe for me, if I reflected on my own personal journey, when it comes to investing, the biggest shift that I made that helped me to go from losing almost all my money to making a lot of money in the market was to consider the risks first. One of my examples is Warren Buffett. Warren Buffett is a very boring stock investor, yet he generated a net worth of $150 billion. And his 2 rules for investing is number 1, don't lose money. And number 2, don't forget rule number 1. Whereas in the crypto market, everyone is only thinking about 10x, 100x, 20x. They don't even consider the risk. They don't care about the risk. They're willing to lose everything. And that's the whole point. Like the crypto market, it's terrible. Yeah, if you don't know what you're doing, you're going to be wrecked.
I think people have to just realize that it's a zero-sum game. And that if somebody wins, somebody on the other hand is losing money. So it's not just a magical pool of money that sums up and then, it will be equally distributed to everyone involved, and it's one big party. It's when somebody wins, somebody loses. One contract equals two participants.
That's right.
So either somebody buys and somebody sells it. So if you buy a contract long, then somebody has to sell it short to you in order to get there. And it's it's a completely different story than when you invest. You actually own that particular asset. Specifically, you see it right now with Bitcoin, for example. A shortage of supply is already happening. We're seeing the big institutions buying heavily right now since the spot ETF came out. I think when we did our last podcast, it just came out or it just got approved.
Right.
Or it wasn't approved yet,
Yeah.
I believe. Something in that manner. But you've seen the data, the influx. It has been unbelievable.
Yeah, BlackRock acquired more than 470,000 Bitcoin as of right now. I mean, probably by the time this podcast gets released, it will be even more. They're buying up Bitcoin by the thousands every single day. So the game is not the same anymore. Bitcoin used to be a retail-dominated market, and now we've invited the devil into the market, the institutions.
Yeah.
Because, these guys, they play the game in a completely different way. So maybe let's talk about a very big distinction. There's two types of money in the market. Number one, we've got smart money, and number two, we've got the dumb money. Can you maybe share your perspective of who are the market participants in each of these two buckets?
Absolutely. And I always like to use the analogy of the traditional markets, the CME, the Chicago Mercantile Exchange, which provides the standard future. So if you want to buy gold, you want to go long on gold, or you want to go long on wheat, or you want to go long on any other type of commodity or currency, you can do that through the CME, same as on Bitcoin. Before the Bitcoin spot ETF came out, the Bitcoin future ETF came out as well. And you have always three types of participants on the CME. You have the non-commercials, which is in the traditional market called the hedge funds, the banks, the large speculators.
Mm-hmm.
You have the commercials, which are the users and producers, or the manufacturers. These are actually the guys that have some utility in the game. In Bitcoin, for example, you could call the miners the users and producers. These are the guys with the underlying information. They know the most about the asset itself because they're operating that business.
Yeah.
And then you have the non-reportables, which is usually the smaller speculators. And the key differences between them is that the large speculators, their intent is to make money. So their intent is not to believe in the concept of Bitcoin. Their intent is to make money, to go long and to go short. So when they build up a position, they buy, they sell at some point whenever they feel they're able to take profits. For, the commercial side of things, miners, they tend to use the futures market not particularly to make money, but particularly sometimes to hedge themselves against losing money because they have operating costs. They need to pay for the fees. They need to pay for their monthly expenses. So based upon that, it's better to understand and kind of make a projection to then hedge yourself. So go short against somebody long. If the price goes up, your short goes into a loss. But at the same time, when you're going into loss, your business makes more money.
Yeah.
So that compensates. So you're not in a loss or profit, but it provides a lot of liquidity into the market. And that liquidity is necessary for the large speculators. So where the commercials, the users and producers, the miners, for example, their intent is to accumulate Bitcoin, not particularly make money in the short term. The large speculators are trend followers. And retail comes into play very handy at certain moments in the markets.
Yeah.
And these certain moments are usually the tops and are usually the bottoms of the market due to the fact that the liquidity is required to exit. Because what we need to understand as retail, if uneducated per se, it's you could open an account on an exchange, deposit $5 on an account. Within 5 minutes you're verified, and you are now a crypto trader.
Right.
So that means that my uncle and my aunt and everyone else involved that never heard about the financials before can suddenly be an operator in the industry.
Yeah.
That comes, of course, with the lack of education. So based upon that, what tends to happen is that, they tend to be the exit liquidity for the smart money. And that's where the terminology smart money against dumb money comes from. Dumb money being the exit liquidity for the smart money, but also smart money induces the understanding of the asset that they trade.
Yeah, let's call it what it is. Most people in the crypto space are not investors. They're not even traders. They're just crypto gamblers. Literally, most people just open up a Coinbase account or whatever account.
Yeah.
They throw $100 there, $100 there, and hope that tomorrow when they wake up, they're going to be a multimillionaire. But that's just simply not how it works. So, in my perspective, one of the smartest money in the industry is BlackRock. And now we have a whole hype around artificial intelligence since ChatGPT. That was a very big shift in the market. But BlackRock was actually developing its AI way before the AI hype.
Yeah.
And this is something that many people are not aware of, but they created an AI called Aladdin.
Yeah.
And Aladdin, I believe it was first trained on the bond market, later on the stock market, and later also on the real estate market. And this AI has access to billions of data points every single day. This AI is so intelligent that governments even pay BlackRock to get access to its capabilities. But I do believe that this big push for Bitcoin right now, that's driven by some kind of insights from BlackRock's AI. I'm pretty sure that after analyzing all of these data points, their AI must have given Larry Fink some signals like this is the moment to get in and to get in big. What is your perspective on this?
My perspective is that you are completely correct. You nailed it. The only difference is that they make it seem like it's some sort of magical formula that just creates money out of thin air. But again, it's somebody in this game has to lose.
Yeah.
Because money doesn't come from nothing. Of course, they create a bunch of liquidity, but per definition in markets, somebody has to lose in order for somebody to win. So there needs to be enough liquidity to be generated to provide it towards the Aladdins, right? The BlackRocks, the large speculators we've been talking about. So in order to do that, need to come somewhat sort of an accumulation period, either an accumulation or in distribution period. And that's why we have something that is called trends. Mm-hmm. And trends are created from ranges, breakouts. We tend to be at particular price levels for a while. We accumulate enough liquidity to expand. And that expansion is usually the exit. Yep. So by definition, it does not mean, and I just don't want people to be scared away from that scary algorithm that rules the markets.
Right. Yep.
Because there are so many other algorithms built on top of that to go and build, and then there are algorithms built against that, and it's just an unlimited amount of algorithms that are running. And one thing is for certain, if you can understand the sentiment, you will probably have or create somewhat of a better edge. And that has to do with the fact that if you understand the dynamics of fear and greed, that's the moment when you can capitalize on. So when they tell you, buy when people are fearful and sell when people are greedy, that's a real thing. Like we have the data to back it up. It's a reality. We have created an index out of that. But the fact, and a matter of fact, is that by definition, when you put all of that together, I just want people to understand that you can still make a lot of money in this game if you do things right. Yeah. And you don't have to be scared away by the big players in that matter. There are a lot of ways where you could join the smart money. Right. Because in the end, it's a free market and you can join however you want to join and participate.
Yeah. And that's the whole point of this podcast, right? We want to discuss the biggest opportunities, but also the biggest risks so that the people watching this podcast are equipped to win this bull market cycle. That's the whole point. In addition to BlackRock, I believe since 2020, there has been one other player in the market which has had a massive impact on the future of Bitcoin as an asset class. And that player is, of course, Michael Saylor and MicroStrategy. So not that long ago, Michael Saylor went on stage at Bitcoin 2024, and he gave his prediction of what he believes Bitcoin will be in the next 21 years. And he said that his base case was going to be $13 million, that one Bitcoin was going to be worth. And I believe that this prediction, and I love Michael Saylor, how simple he explains things, but also how he backs it up with the right data and mathematics. I think this is really triggering a lot of companies right now to reconsider what they're doing with their excess cash on their bank account. They could either leave it in their bank account and let it lose value due to inflation, or they could follow the MicroStrategy model or the Bitcoin reserve model and convert some of their cash. So we see that, Japanese companies like Meta Planet, but also US publicly traded companies, Semler Scientific, Rumble, the social media platform, and soon Microsoft is even going to vote whether they're going to invest in Bitcoin or not. And I believe they hold $80 billion in cash or something like that.
I mean, it would be the perfect exit strategy for the stock market. I mean, for people that are paying attention right now, we're at an all-time high.
Yeah.
It's probably the biggest bubble we've ever seen before. Not just on the stock market. Gold is at an all-time high.
Everything is at an all-time high.
Everything is at an all-time high.
Yeah.
So at some point we have to understand, well, if everything is in an all-time high, where does that money come from? So by default, when talking about Bitcoin and their fixed supply, we can talk about Bitcoin becoming worth $10 million. We can also say, how much will the dollar be worth in 10 years from now?
Yeah.
So maybe nothing. Maybe it's useless.
Yeah.
So how do we measure the value of Bitcoin? How are we going to measure it? Well, by having a fixed supply, by having scarcity towards an asset that's programmed, where that's value, that's real value. Now, when it comes to the utility, and I think that you might be able to share some, with that as well in regards to the energy and how that's distributed, because that's what Michael Saylor is talking about, like money or value is energy.
It's energy, yeah.
And same for Bitcoin. So
yeah, many years ago in 2017, I remember buying my first Bitcoin, and I bought it because I was super greedy. I had FOMO. Everyone around me was making money that bull market cycle. I was that guy that wanted to get rich quick with crypto. So I invested my first $8,000 of my first hard-earned money into Bitcoin, hoping that next day I would wake up and it would be 10 times worth more. But actually it was worth half. So I panicked, I sold everything, and I made a promise to myself, I'm never going to touch this ever again because I don't understand it. It's some kind of magical internet money with no fundamentals behind it. And I didn't understand it. But a few years later, when I sold my companies and I really started to study this asset class and I got deep into mining, I understood that just like gold, you need to make an investment in order to acquire gold. You need to invest in machinery, you need to get land, you need to get people, and there's some kind of production cost to gold.
Yeah.
The same is true with Bitcoin. If you want to mine Bitcoin, you need to invest in machines, you need to invest in electricity, and there is some kind of production cost for Bitcoin. So when Michael Saylor talks about this asset class, which is being backed by energy, yes, a lot of investors and people are putting their money, time, and capital behind this asset to produce it, to keep it running, and I think it's... one of the greatest inventions.
And that is why Bitcoin is a real commodity. It is actually a real commodity. And this is also what a lot of people just don't understand. It's just the utility behind the creation of it and the mining of it is the same exact process as mining gold, but just virtual. But the whole process of getting there, the production costs, setting up the sources, energy, energy needed to get there.
Yeah.
Like all these things combined show and prove that it's a true commodity. And that's the utility behind it. And we talked about the commercials, having a lot of information, Bitcoin miners in this case. If the Bitcoin miners would be in the game, for the money, I don't think that Bitcoin mining by itself would be the most profitable game in the short term, but in the long term, it's going to hugely benefit them. So they need to have a long-term vision. And if they didn't have a long-term vision for something that's called, Bitcoin in this case, then we would not be here today talking about Bitcoin reaching 100K right now. There is just no other way by default having the utility it has right now.
Yeah. Let's merge these two topics. So long-term vision, the supply of Bitcoin, and these two players that we just discussed, BlackRock and MicroStrategy. I woke up this morning. One of the first things I usually do is I go through X for 30 minutes. I check what has happened in the market. And I just saw that MicroStrategy bought another few $1 billion worth of Bitcoin. And right now they're holding 400,000 Bitcoin. BlackRock holds 470,000 Bitcoin. Combined, these two players hold almost almost 1 million Bitcoin. That's rounded up. But I expect this trend to continue. MicroStrategy has already announced that in the next 3 years, they want to raise 42 billion to buy more Bitcoin. They call it their 21-21 plan. It's going to be half in debt and half in equity. And BlackRock just keeps on buying hundreds or thousands of Bitcoin every single day. My question to you, there's two theories. Either this might be one of the final cycles where we're going to have the typical 4-year cycle where after an amazing bull market, we see a 70, 80, 90% correction. So maybe afterwards, after this cycle, Bitcoin could become more of like an Amazon stock, a Tesla stock, or like an S&P 500 that just slowly goes up in value over time. Or it's going to amplify the cycles even more. So the highs are going to be higher and the lows are going to be even more extreme and intense. What impact do you think these two players and similar players in the market are going to have on the cycle?
Well, my belief is that Bitcoin is here to stay. And the reason why is because when you look at BlackRock, you're talking about 400,000 Bitcoin to date. Then also looking at MicroStrategy, also another 400,000. So let's say they have indeed 1 million Bitcoin combined. I have no calculator right now, but roughly speaking, like how much is that? Is that like 100 billion worth of value?
Let's assume that. Yeah.
Whatever, right?
Yeah.
Something in that manner. Well, in that manner as well, when they are constantly increasing throughout, their investment banks, because in essence, BlackRock is just a holding, right? We have to also understand that BlackRock is not just a simple hedge fund.
Yeah.
What they do is they have a ton of funds and banks working underneath them, all kinds of different investment banks in all kinds of different countries, and they license a package deal, right?
Yeah.
And that's the spot ETF for Bitcoin. So all these different investment banks work under different rules and they buy and sell. So it's not that the only thing that BlackRock is doing is accumulating and that's it. No, each investment bank under BlackRock has their own rules and reasoning for buying for their clients, right? So it's important to understand that that's one layer. Secondary, if you look at the overall structure of BlackRock, in the end, everything leads to the top, right? If you can control, one massive stream of money flow, then you can control what can happen with that currency or that commodity or whatever the case may be. So of course, there is a lot of influence involved. Then we need to think about what is their intention.
Yeah.
What are the logical reasons for them to potentially enter the market? Well, is it to just make a bunch of money to get in and to get out? Well, if you accumulate so much Bitcoin, then a counterparty at some point has to buy it from you in order to turn this into a realized profit.
Yeah.
So thinking that by default that's their intention, they're just accumulating. Well, at some point the money has to come from somewhere to offload as well, if that's the case. So yes, they're going to do this, partially to compound, to potentially buy more. But if you accumulate that much Bitcoin in that short period of time, the theory of it just being a pump and dump scheme becomes very, very unreasonable because of the fact that it takes so much money to get rid of that money to make more money and turn it into realized dollars or whatever the case may be. So I believe that Bitcoin is here to stay. You can tell by the way they're accumulating, and I just don't want to speculate in what the deeper, conspiratorial reasons are, because there might be a lot of things behind the scenes, in regards to potential economic recession and Bitcoin being the perfect exit strategy for, the traditional ecosystem towards more of a new wave, which is crypto. But I'm also not counting it out either.
Let's talk about what a pump and dump is. A pump and dump is when a large bag holder sells a significant portion of their holdings when the price has increased after a while.
Correct.
So in theory, if BlackRock holds, 470,000 Bitcoin, and they just sell 100,000 at the top of the market is going to go down, but they will get their money out of the market. So yeah, of course, there's a big risk when such a percentage of the supply is concentrated in the hands of a few people. But I do believe that the game that BlackRock is playing is assets under management, right? They want to accumulate as much assets under management as possible, whether it's stocks, bonds, real estate, Bitcoin, crypto. So I do believe that compared to the retail investors, the dumb money in the market who just want to get rich quick, I believe BlackRock and MicroStrategy and many of the other institutional players right now have more of a long-term perspective.
Yeah.
So I think that's going to be very interesting.
Yeah, and you want to control a narrative. I think that's important as well. If there is a risk of being excluded and not being able to hang out with the big boys, you want to get involved, right?
Yeah.
You always wanted to hang out with the cool kids when you were at high school, right? So it's just the same principle of when something that seems indestructible appears, you can get your hands on it, then, getting at least some exposure, some control is a benefit to them. And I think that because of that, I don't think that it's, if you can't destroy it, it's better to control it.
Yeah.
And I think that's the mindset of BlackRock, is just to control rather to destroy, and rather to profit from it, in the short term, like many retail traders are doing. So that's indeed a completely shift in mindset from the smart money against the retail trader.
Yeah.
Yeah.
Let's zoom out even one level higher, because of course we have retail investors, dumb money, we've got institutions, smart money, but we're seeing another player enter the market, and that's nation states. So for the past 15 years, many governments have fought against Bitcoin and crypto. Smear campaigns, newspaper headlines, laws and regulations that were anti-crypto. And now we're starting to see a shift. Trump announced that he wants to turn the US into the crypto capital of the world.
Yeah.
China is showing signs that it's reversing its ban on crypto already through its proxy Hong Kong, but now also within China they're loosening up the regulations again. El Salvador, of course, the El Salvadorian miracle. They went
That's
from
the
one of the...
That's the one.
That's the case study. That's the primary case study
yeah.
where it all started. And I think this is game theory. If you see one country that's getting all the shine, or one company that's getting all the shine, like MicroStrategy, you don't want to be left behind. You don't want to be the sucker that misses the trend, or the last one that catches on. So after we have this case study of El Salvador, other people are opening up. We also see that Bhutan is mining Bitcoin like crazy. They mined $1 billion worth of Bitcoin. Bhutan is just a small country. It's like 30% of their GDP is just the Bitcoin that they've mined. And now we're seeing a shift. The US is talking about becoming more crypto friendly. China, Russia made Bitcoin mining legal, turned Bitcoin into property. What is your perspective on nation states entering the boxing arena?
Sure. Well, what we have to understand from nation states, these are in essence just big companies.
Yeah.
That's all they are. And their intent is to make a bunch of money from the taxpayer. So they get a bunch of money from the taxpayer, to make it very simple. They have a bunch of money to work with. And what they do is they invest that in funds, such as BlackRock, for example. So the way to get exposure to funds and a potential new trend, which is then Bitcoin, and indeed what you just said about El Salvador, you nailed it, about the case study, the ultimate proof of investing when nobody was believing in it.
Yeah.
Shout out to what's his name? Anyways,
President Bukele.
President Bukele, my man, your G, absolutely incredible. Yeah, no, absolutely, he nailed it. So, of course, nation states are just big companies, and their intent is to drive more profit. So I don't see any reason why they wouldn't get invested. We're seeing a little bit of a different side from Europe. Europe is trying to really ban crypto and quote unquote protect the end customer by banning them from every single platform and every single way. And then it's always out of protection of us, because we're unable to think ourselves. So, it's better to just ban it from, us having access to it as Europeans. But when it comes down to, the understanding of bigger companies, their intent is to drive the markets up by making profits. And, where they first were putting it into, pension funds, instead of putting it into pension funds, or, pension funds that turn more money and more money, they use the pension funds to invest it in things like Bitcoin as well, and not just real estate anymore, that sort of stuff. So it's just another proof of concept. It's just another logical step. It's another part of the adoption curve that was inevitable after, we're seeing the regulations getting a lot easier, and I think the Trump win, by definition, helped a lot. However, we also know how much he loves the dollar, so we will really have to see if that actually comes to fruition as what he says. But
Right, but are they mutually exclusive? You can have an economy based on a dollar and still have an allocation of the government to Bitcoin, like they have to gold.
yeah.
So I think it would maybe even make the dollar stronger if they wouldn't have to print trillions every few months in order to survive.
Yeah, so I made a prediction about the dollar around 3 months ago on my channel.
Okay.
Because I do these type of predictions where I underline the sentiment of the market and I use that information to determine what's going to happen. And I said the dollar is at the bottom here. Everyone expected that after the rate cuts, the dollar would just come down. And then suddenly that didn't happen. And price came up, around 7%. Right? So what we have to understand that during the period since October, Bitcoin went from 60K to almost 100K or 100K, whereas the dollar still went up around 7%. And that's a lot from a dollar standpoint, going up 7% in around 2-month period. So what would have happened with Bitcoin if the dollar came down 7%? What would have been the price of Bitcoin?
Above 100K.
Yeah, much higher, right? So we still have to understand the dynamics between the value of Bitcoin. And as long as we're measuring a commodity like Bitcoin against the dollar, we also have to understand that a stronger dollar is not by definition beneficial for Bitcoin when it comes down to the short-term speculator.
Sure.
Right? So yeah, the other thing is in regards to Trump and Kamala. I mean, which one you rather have to have as a president? I leave it up to you to decide. But in my opinion, if the other party won, it would have been dramatically worse when it came down to regulation. That's just a fact.
Yeah.
So
yeah, I mean, already since Trump got elected as a president, we made huge wins. For example, Gary Gensler announced that he's going to basically quit or that he's going to resign. And Gary Gensler, head of the SEC, has been one of the figures that held the crypto industry back by never coming out with a very clear regulatory framework. And I think now there's going to be more clarity for crypto companies. Finally, they have the confidence to invest in this industry again. And I think now we're going to hopefully see a big acceleration. Many of those companies move to Dubai, actually, because Dubai is setting itself up to become the Silicon Valley of crypto, which is nice. It's a nice industry or nice niche that they're carving out in the financial industry. But I do believe this will give a lot more peace of mind to US-based companies. Also, a lot of crypto mining companies are based in the US. So I think this is going to remove a lot of uncertainty from the market. And the market doesn't like uncertainty that much. So yeah, I think that's going to be really good.
So I heard you're selling your Lamborghini, or what's happening?
Man, my Lamborghini has been for sale for the past 9 months. It has been the worst investment that I made. I wish I would have put it in Bitcoin. Then I could have bought 3 Lamborghinis in the next 9 to 12 months.
I heard that every car dealership, you can practically buy any house right now with Bitcoin as well in the UAE, correct?
Yeah.
It becomes that easy, accessible right now.
Yeah.
So yeah, very interesting.
Yeah, very interesting time. So we've got big institutional players, we've got publicly traded companies, pension funds, banks are now also holding Bitcoin on their balance sheet, mostly through spot ETFs. They don't have direct exposure. One of the most sneaky things that happened was, I believe, Jamie Dimon, the CEO of, was it JP Morgan Chase?
JP Morgan, yeah.
Yeah. Well, was it a few months ago they announced, like, we will never touch Bitcoin ever again. Everyone within my company that will buy it will get instantly fired. And they announced this to the world. And then people behind the scenes analyzed that there was some kind of subsidiary in Europe which was buying massive amounts of Bitcoin right when they were creating FUD in the market. And that's a sneaky game that the big institutions are playing. They're manipulating the masses. And it's crazy. So yeah, we've invited the devil into the market.
Well, I'm not sure if we invited them, but yeah, well, kind of actually, because we want them to get involved, because we want to have more eyeballs, but we also have to understand that these articles, they don't magically appear either. Like, Bitcoin was already going up from 20,000 to 60,000. That's a 3x from that current price, and nobody was talking about it. Not a single article in the news, nothing. So when you read the news, you really have to always think about what's the reasoning behind this.
Yeah, hidden
And,
agenda.
and am I gonna make any trading decisions or any investment decisions based upon that? Or am I actually gonna do some research and do some proper analysis and work to understand the utility behind it better? Because you're gonna get screwed if you're gonna watch the news. That's why I never personally really watch the news, just as my prime source of understanding what's happening. All right, I will never type in on Google Bitcoin news without having the deeper understanding of different layers, so I understand the reasoning why they're saying what they're saying. Okay, because somebody's paying for these articles, and it's definitely not you and me. So that's very important. That news is driven by politics and driven by an agenda.
Yeah.
And indeed, what you're saying about JP Morgan is correct, right? Creating fear for a particular reason, and that is to accumulate more
At the lowest possible
at
price.
the lowest possible price. Yeah.
Yeah. Talking about news, you spend a lot of time on X?
Yes, I do actually. Yeah.
Yeah, I think I did not spend that much time on X because I never knew how to find the right accounts to follow until this year. So, quick hack, one of my strategies to get instant access to the best possible feed that you can have. Find a few people within the space and follow the people that they're following. And within no time, your feed is filled with really useful bits and pieces of information, much better than the news on TV, the radio, or even Google or whatever news app that you're using. It's just real time. Well, there is a little bit of a bias sometimes, but that's why you follow different people on the app, and then you can piece it together and form whatever conclusion you want. That's the whole point.
I would say shout out to Grok, my guy, my second guy. You're gonna outperform your ChatGPT. No, just unbelievable developments as well here, and I love just it's real time.
Yeah,
it's real time, and it's so important with everything that's happening in the world right now and all the information getting bombarded our directions. We want to understand what's happening now. And everything that happened 3 hours ago is just way too long ago. Right? We want to know what's happening at this moment, and that's just the game and the world we're living in. Like everyone has a very short-term time span, so you need to be as relevant as possible.
Yeah, and, totally true. Yeah. We live in the TikTok society, and 3 second
threads, these threads, not the app threads, but these threads,
the threads on X.
Incredible.
Yeah, so much information.
If you have the right people, what you're saying, and then you're following these threads and you read these headlines, man, you get sucked into another world where you can see you get the best of the best.
Yeah.
And it's just, it's incredible. Yeah. Yeah, absolutely.
Let's talk about making money. Because so far we've spoken mainly just about the context, the market. Let's talk about making money. So earlier on, we discussed investing versus trading. If someone watching this podcast right now, what do you think is the best possible way for someone to make money in the crypto market, short term and long term? 2 different paths.
How do you quantify short term and long term? I just want to make
short term. This bull market cycle, long-term retirement.
Okay, so we're talking 6 to 12 months, and we're talking 6 to 10 years.
Yeah, correct.
That's it.
Yeah.
So from a 6 to 12 month perspective, we know that Bitcoin tends to run the most in the shortest amount of time, which is around this time. So if you want to get involved now in the markets, then you're probably going to get the biggest gains when you look at the short-term rally that will occur. The question then will be, when I already said at the beginning, is if you start trading, then there is a lot of fear of losing money, right? Because this is where a whole other perspective comes into play. Do I trade with leverage? If I trade with leverage, what is my exit plan if things go against me? Do I lose all my money, right? How much do I need to lose it? Whereas with investing, you own the actual asset itself.
Yeah.
So there's a big difference between owning an asset and speculating on an asset. And I really want to make sure that people understand the difference between owning and speculating. Speculating means if you're wrong, you're wrong. Bye money. Owning is you can be wrong, but you still own the asset.
Right.
So if you invest in the right asset, then the long-term approach will still save you. That's your security layer. So if you are if you have zero education in the market, you've never traded before, you have no idea what a stop loss is or how to place a stop loss properly, how to manage risk, then owning and buying the right asset is, of course, the better way.
Yeah.
Why? Because you own it regardless, and at some point, price should recover if you bought the right thing, right?
Yeah.
And there are no guarantees of buying the right thing here, but with a little bit of research, it becomes easier to invest than to trade. So I recommend in both cases, start investing, especially now with the run in the short term. While you're investing, also get familiar with trading if you want to, create some cash flow, because of course a lot of guys see the opportunity, but they don't have the money.
Yeah.
So what do you do then? Well, then you're forced to trade, and that's the deep hole a lot of new people come in the markets with. They're like, okay, but like I have not much money, but I want to get involved, so I'm forced to trade now. No, you're not forced to trade now. There are a lot of opportunities out there. You're forced to educate while you invest at the same time. And I think that along the way, if you are interested in trading it, I'm trading for now already 10 years. It's not just a one-way street where the next week you're gonna be a profitable trader. It takes a lot of work, a lot of effort, a lot of pain, a lot of losing money. And there is a big term that I believe in. If you were in a poker table and you are with 4 people around you, you're trading or you're playing poker, and you don't know who the sucker is, then you're the sucker. There is always a loser in this game, and if you don't know who's losing and for what reason they are losing, then it's most likely going to be you. So, investing over trading anytime for the new people. But at the same time, it's a fantastic way if you have the experience to generate cash flow and make money.
Interesting point. So you said something which we need to magnify a little bit. You said investing in high quality assets. And this is something that you should not miss in your explanation, because you can invest in a small cap coin, mid cap coin, but the raw reality is that 95% of all crypto projects will not survive the next bear market. Why? Because there's limited money, attention, and developers, talent. And all of those 3 resources are competing for the same projects. And the attention span is really short. When a new narrative pops up, all of the money, attention, and talented developers move to the next hot thing. They are not loyal. They just want to make money quick. So that's why the longevity of projects is short. So what defines a high-quality project?
I think you're nailing it. And that's one word, and that's developers, right? There is a lack of good developers in the world. There is the amount of money that the highest top-rated companies in the world pay for the best top developers in the world. And of course, we have AI and we have all that stuff, but you need to still know how to, create something with that. It's not that if you just want something that you can get it like that. You need at least somewhat of an understanding of how to create. So good developers are critical in this space, and it's very hard to pull off a good solid project. So finding good developers and also being able to track developer activity is, in my opinion, where the most reliable trend lays. So this is what you're seeing now with some top rated companies. I'm really looking at the top 10, let's say. I want to stick with the top 10 here. Look at AVAX, Avalanche, amazing developers, like coming up aggressively. Ton, amazing developers, So you can kind of see the people behind it. So I heard the saying, it's a very popular saying, but it's still one of the most undervalued sayings as well. And that is that, don't bet on the coin, bet on the people.
Yeah.
Bet on the people behind it. What are their intentions? What do you know about them? Follow them, follow the money.
Yeah, that's going to be very hard when you see some kind of meme coin pop up and do 100x, 1000x.
I know, it's crazy. Yeah, it's really wild. I have no FOMO though. I don't have zero FOMO. It goes against my personal principles of how I grew up and how I learned the markets, how I learned to approach the market. So it goes against everything I do, and that is to understand what I'm doing, understand the things behind it here. So I don't feel any FOMO of missing out.
So you're not in meme coins?
I'm not in meme coins.
Great,
no.
great.
And some people will call me crazy, but I'm in this game for a while. I like to invest in things that have somewhat of a utility factor, and then just at least try to project some sort of utility, like at least that. So yeah, man. No, it's fun. It's great. It's a great way to attract a lot of new people to the markets, getting a lot of eyeballs again.
Yeah.
And in my opinion, this might be the perfect start of and the only way of pulling retail back into the markets in the first place after 2022 or whatever happened last cycle. So, I mean, how else is retail coming back to the party? It's like, it's up for debate, but I mean,
Yeah, I'm happy. I'm happy you have the same perspective as me on this. So I'm also not in meme coins because for me it's a matter of principles, right? You have trading, investing, and gambling.
Yeah.
For me, there's nothing fundamental about meme coins. It's just luck. Of course, there are some communities you can go in Discords or Telegram or X, and yeah, of course, some meme coins are more hyped up than the others, but it's a meme coin.
Yeah.
Like most likely, what we mentioned, there's a lack of attention, money, and developers, and those will just jump from one project to another project. So the big risk that you have with meme coins is if you don't cash out, you're gonna lose probably everything, 99%.
You heard that story about a 19-year-old that made like $40 million and then, just spent it all on hookers, cocaine, and just lost everything. And,
No.
So this is a common story these days. Like you see these 17, 18-year-olds making a shit ton of money on top of the world, but no underlying development. So it's also important to understand who are you as a person and what do you want to get out of it? Because if you just want to get in and want to make quick money, the faster you're going to make it with zero understanding of how you actually made it, with a lot of luck, the faster you're going to lose it. It's a typical lottery story where you hear people making a bunch of money. They have no understanding of how the world actually works. They're still, a 19-year-old shitheads, that have no clue about what's happening. And if you make so much money in such a short period of time, at some point, it has to go wrong.
Yeah.
It's much better to develop and understand, the reasoning of why you enter the market in the first place, and get ready and prepare yourself. And it might take a bit longer, but at least you know how to deal with funds. And I can tell you because I lost and made money 7 times. So
Seven times.
I was there and I lost it 7 times in a row, and I had to learn the hard way. So just trust me when I'm saying this, that the longer story is sometimes the better story.
Yeah. So what is the reason why you got in the market? To give people an example.
I wanted to make a shit ton of money.
Okay.
And I lost it. So that's the prime example. I'm saying this from my personal experience. Like I came into the market, I lost it a long time ago in 2016. And it shook my interest. I stayed to trading since that period of time, which is great. But in the end, my intention was to make money. We cannot neglect the fact that we're not in it to make money. But what I do realize is that I wish I didn't start out this way, because the habits that I learned were the wrong habits.
Yeah.
And it took me years to unlearn these false beliefs I had about the market before I actually started to make money consistently, become a consistently profitable trader, become fully understandable of how the supply and demand dynamics of the market actually operate, rather than just making some quick money and just, not understanding the true wealth or what money actually means, how it works, and the true essence of what you can do with it.
Yeah, that's interesting. I think, like you said, most people just want to get rich quick, and I believe quick money in, quick money out, right? At this point, if you would ask me the question, why are you in the market? I would answer, I want my next generations to be set. Right now, I've got enough money that I don't need to worry about money
Was that
anymore.
the same that when you started the first time in crypto? Was that the same intention?
For me, there are 3 things. You need to learn how to make money. For me, that's my business. I'm making money with my business. The second thing is learning how to save money, because it's not about how much money you make, it's about how much money you keep. Because if you spend it all, if you make it and then spend it right away, why work in the first place? You're at zero again. So make it, spend it, multiply it. And for me, that's investing. So I made most of my money with my businesses. I'm an entrepreneur. I build businesses that generates cash flow, and I take my excess cash, I invest it in the market, and it compounds over time. So since I started to educate myself on money, finances, Warren Buffett, my biggest example when it comes to money management, is just learn not to lose money and at the same time let it compound a little bit. So I know right now what I'm building might be just now a small snowball, but as it rolls down the mountain, it's becoming bigger, bigger, bigger. And at one point, it becomes so big and unstoppable that when it goes through a forest, it will run over all of the trees. And that's how I see my wealth. You know, I want to trigger something right now that my future generations can also live from. And this takes a completely different mindset when you're investing, because you consider the risks more than if you just want to get really rich real quick with a meme coin.
Yeah. I think we also have to kind of understand where this mindset comes from, because if you look at the traditional banks and, you know, back in the 70s or 80s, 90s maybe even, saving money was a big deal, and everyone was just in that saving mindset. And at that time it might have worked, right? If you had $1 million and you got, you know, 5 to 10% per year on your money, then you made enough money to live from that money and to be retired and to support your family. So that was great. Now we're at a stage where, you know, we get hit from all angles, right? We have inflation, which is a big problem. You know, if your money, you know, doesn't vaporize by inflation, then it will buy negative interest rates. So it costs you money to to let your money sit on a bank.
Insane.
You loan
Insane.
your money to
Yeah.
an institution, to a company that
they're
then
making
charges
money with
you
it. Yeah.
from that, while they charge you for it, and then at the same time they're making a bunch of money with what they want to do, and that is invest their money in Bitcoin. So
Insane.
it is absolutely crazy. So what's happening here now is, throughout that whole scenery, we know that we are forced to start going and think from a more of an investment mindset, a more aggressive manner. And I think we also just, you know, because you see all that quick money going from TikTok, where these 15-year-olds make 20, 30K a month, and then this guy made 30 million on poop coin. You know, it's just, of course, it triggers you, and you think, oh man, this is the only way I can become part of that.
Yeah.
And that's the lack of education and the lack of understanding what a true edge in the market means.
Yeah.
A true edge in the market for me means setting up a clear process in whatever I do. And whenever I set up a clear process, I understand that by having a process, I know that I can automate it at some point where I just know what the actual data tells me. Very data driven. And based upon that, I can start making more informed decisions. Now, how do I get and gain that perfect process? Well, this takes time. I cannot give you in 5 minutes a laydown of how to set up your perfect process, and you can start. But it's where it begins. It's by understanding the why and the reasons why you're in it and what your intention is going to be. And that I can already tell you this, that the long-term approach is usually the wiser approach.
Yeah.
And 9 out of 10 times outperforms all the short-term speculators. So
Yeah.
I'll leave it at that. Yeah.
I totally agree, but people always have this ego and sense that they are special. That they're the one of the few chosen ones that can perfectly time the market, that can perfectly time. But that's an ego thing. I think if you want to be successful with investing long term, you need to learn how to set your ego aside. So, all right. Earlier we discussed quality projects. I know a few days ago I posted a video on my YouTube channel. Slightly controversial video maybe. I know a lot of people will have a contradicting perspective. We spoke about developer communities. Right now the project with the biggest developer community is Ethereum. Ethereum has the most dApps, most developers. Yet I believe that for me, this is going to be the final bull market cycle where I'm going to be holding such a big bag of Ethereum. I don't believe in selling my Ethereum right now. I believe this is going to be an amazing bull market. But I do believe that first movers within industries, for example, did you have a Nokia phone when you were at elementary school or high school, the Nokia, the brick one, the 6610.
The 6610.
The
Wow,
one
no,
where you
that's
can
really
play
old school.
Snake.
I had the 3310, which was like even older, no?
Yeah, I think
I'm not
so.
sure. I'm not sure how old are you, by the way?
32 now.
32.
You?
32. I'm 30. So, yeah, we're getting there. We're getting up there in the rankings. But Snake. No, absolutely.
Yeah, so where's
Completely aware of
Nokia
it.
right now?
Yeah.
Nokia is nowhere to be found. Same with Kodak. Kodak created the photography industry almost. Where's Kodak now? It's Canon and the other camera brands. Even electric vehicles. Yes, Tesla, super innovative, massively valued company. But if you would ask me, would Tesla exist 100 years from now? And you need to take into account that Elon Musk will not live forever. I'm not sure if Tesla will remain the market mover, the dominant player in the market. And I believe right now with all of the innovation that's happening in the crypto space, because the crypto space is like the tech industry on steroids. You have some of the smartest people in the industry that are being attracted there right now. I think innovation is happening at an exponential scale. And I believe Ethereum is becoming a legacy project. If you compare it to other projects out there that can do what Ethereum does, better, faster, cheaper, I'm not sure if it's going to be a right horse to bet on for the long term, because I'm a long-term investor. I like to accumulate stuff and hold it for as long as possible.
So what do you think the reason is why Ethereum is still the current leader of the altcoins, the biggest,
First mover advantage.
first mover advantage?
That's what I believe. Because if you are the first one in the industry, then people don't have much option other than building on top of you. And when the first projects start to build on top of you, and they created this programming language called Solidity, so people become proficient in Solidity, and then it becomes easier for their next projects to develop in a language that they already know.
There we go.
And I think that's giving them some first mover advantage.
Mm-hmm. So when you look at the second change, let's say, do you see any potential in layer twos? What is your opinion about layer twos at the moment?
I think the nice thing about layer twos is that they understood at that point that it might not be a smart thing to compete with Ethereum, but instead it might be a lot smarter to make Ethereum better, faster, cheaper. So yes, I do believe that some of the problems that Ethereum is having as a legacy project is being solved by these layer twos. But it also feels a little bit like a band-aid on a wound. Why would you put a band-aid on something if you could create something superior from the ground up?
Yeah, instead of rebuilding, if you want to build a skyscraper, it's better to build a new one rather than removing,
refurbish an old...
reconstruct an old one. No, I completely agree with you. So if you would look at your altcoin exposure, because I know you are a Bitcoin maximist in many ways, in full. So how would you define now your overall altcoin exposure to the market here?
I would say 25%, more or less.
25%.
Yeah.
And that's mainly Ethereum, or
out of that 25%, probably 70% Ethereum.
Mm-hmm. Okay. Mm-hmm.
Yeah. What about you?
Yeah. So I'm much more much more of an altcoin specialist, just because I know the short-term volatility it brings of what it means for the Bitcoin dominance to at some point drop. Like we're seeing these aggressive levels, and the Bitcoin dominance is one of the main charts I look at to just understand the dynamics between Bitcoin and between the rest of the market. And as a trader, for me, it's a must that if I'm in the game also for short-term, rule 6 to 12 months, which is not like day trading, but it's more of like having bigger type of swing trades. It's important for me to look at things like the Bitcoin dominance or the Tether dominance, like how much money is in Tether and how much money is distributed from Tether, because if they buy a lot of Tether, of course, we know that they're usually selling crypto for it. So the question then is, by looking at the overall market, is what are they selling? Are they selling Bitcoin for Tether? Or are they selling altcoins towards Tether, right? And that's where you have things like Total 1, Total 2, and Total 3. These are all technical terms in trading.
Yeah.
But we're seeing now that the Bitcoin dominance is at the verge of breaking down, and this is where the new altcoin rally
Sure.
really starts to begin. And I don't think we're that far away from getting into an altcoin rally now, due to the fact that we have not even seen the Bitcoin dominance drop yet. We're still sitting at the highs, and today is the 3rd of December. We've seen XRP going to the to the fucking moon. 100 billion market cap increase. And we're talked about in our last conversation. We said that we wanted to take consideration that money in a spot ETF usually tends to come from institutional investors on the stock market, not particularly in the crypto market. Well, there is no crypto, there is no Ripple or XRP spot ETF. So this is real money coming into the crypto market. So to me, this is one of the biggest signs we're going to see probably, even though I'm fully believer of Bitcoin, the utility, the long-term understanding of the power of it. I believe in potentially the super cycle that is yet to come.
Okay.
Because if the Bitcoin dominance does not drop, it's not coming down. And that means, just in Bitcoin dominance, total market cap, Bitcoin market cap. That's the Bitcoin dominance. If $100 billion in market cap, comes to Ripple, XRP in particular, and that money comes from somewhere and not from Bitcoin, and Bitcoin is yet to drop, then we're just going to see the most sickening, craziest altcoin season, we've probably ever seen in that short period of time.
Okay.
Which is no surprise based upon all the money we're seeing in the markets
And
now.
how does this relate to your perspective of Ethereum?
Well, Ethereum is seen as the kingpin of the altcoins. So, what we tend to see first is that Ethereum is setting up, and this is what we have been seeing. I think people have been really sleeping on Ethereum because Ethereum was supposedly dead. Mm-hmm. And I think it doubled, or didn't double, but it gained 50% in the last 3 or 4 weeks. Yeah. So it had a massive recovery, and suddenly Ethereum is coming back to life again. I personally believe that, yes, long-term utility aspect, you're probably right. This happened over and over. There are enough quantifiable reasons why this may occur. But I do believe that we're going to see, a major surge of liquidity getting injected into the market, and Ethereum will probably lead that. This cycle.
I think we're exactly on the same page. Yeah. I think this is going to be an explosive cycle still for Ethereum. But if you're looking at, for example, if you go back to previous bull market cycle, many NFTs were first built on top of Ethereum. ETH was where all the volume was. Everyone wanted to build their NFTs on ETH. But now you're seeing that many of these meme coins are being built on top of Solana, I believe. So they're choosing different blockchains of choice. And I do believe that's one of the first few signs that there might be a big shift happening. For example, one of the projects that I invested in, Helium Network, HNT, they also migrated from Ethereum to Solana, and you're seeing a few big dApps that are migrating to different chains. So it's not anymore that we have the go-to chain Ethereum, but there's different platforms out there which are now becoming serious competitors.
Mm-hmm. Yeah, the best way to describe, and I think to confirm with your bias about Ethereum in the long term, is to just look at two things. Number one is speed, and number two is price. Yeah. If the speed is slow and the price is high, it's probably not going to be a good advantage in the long term. People are going to look for faster alternative. Yeah. But if the speed is fast and the costs are higher, then sometimes that can be an advantage as well, because at least you know that within that time period, your transaction comes across faster. So for big transitions, or if you have to send money to someone and it has to arrive fast, then you're willing to pay more for it because it's going to arrive fast. If it, on the other hand, in Ethereum, is and slow and it costs a shit ton of money, and it can go, you pay. I've seen as high as $200 in gas fees for a single transaction.
Yeah, well, and it takes a few hours.
This is somebody's complete portfolio, right? $200 in fees, whereas for Solana you pay less than a cent, and it's probably 10 times faster. So, yeah, no, there's no denying that they're trying to fix this, and Ethereum is doing their absolute best to reduce cost and to increase speed, and they are doing it. Like we are seeing an improvement in their overall network. So it's not that they're not improving at all, because it's getting better. The question is until when, until what point, are they capping, reaching their maximum exposure, and things start to go downhill from there. We don't know that. We haven't seen that yet this cycle, but it's gonna come, and everyone knows that, and everyone is afraid of that. Another layer is looking at utility factors like gaming. I'm still a big believer in gaming. Gaming might not have its run yet, but I think it will come.
Yeah.
And I'm going to be that guy that's going to be there in 5 years and going to say that gaming is going to explode. And I'm going to be right in the long term. But again, if you play a video game and you want to incorporate crypto into your video game, and you want to make and turn your game into an actual, real economic exchange or whatever, you cannot wait 5 minutes for your transaction to be approved. That's just not possible. So, the underlying utility, companies of utility, they need speed. And if you cannot provide speed, you're going to lose out.
Right. Yeah, imagine you're playing a game and you want to send your rare skin, sword, or gun to another player, and you need to pay $100 in gas fee and wait a few hours. That doesn't work. It doesn't work. So remember last time we spoke a few months ago, and we spoke about altcoins. You said you were specifically positioning yourself into two different narratives, AI and gaming.
Yeah.
You still put your full weight behind those two narratives. Full weight.
Fully committed. I'm fully committed to this game. Okay. And this is what we're seeing now. We're starting to see it now, and it's going to come. We're seeing it happening. And that is where I'm not sure you said about that this is going to be the meme coin super cycle. I think, yes, for now, beginning stages, full on meme coins, attracting as much liquidity as possible into the market. Yeah, excitement about the market.
It's like the NFTs last cycle.
Exactly. However, I do think that we're going to see a utility shift. We're going to go from speculation, pure randomness, towards utility. And I think that utility and the understanding of utility and what true utility in the market actually means is where a lot of smart money that are invested in the altcoin space are positioning themselves. So two of these sectors are AI and gaming. I can go really deep into all the technicals behind it and on-chain and the data that says that they're accumulating a lot of these projects. But I just see a massive transition coming from memes towards cycles like AI or gaming or something like that.
I personally believe that the winning narratives will really show a little bit later in the bull market. So up till now, it's really speculation. Everyone is trying to place their bets. No, this narrative is going to pop. That narrative is going to pop. That narrative is going to pop. So let me tell you my perspective. Not that long ago, we had the ChatGPT moment. That was the moment where everything AI became a super hype. Nvidia stock went to the moon. Still one of the highest PE ratios on the stock market. And I really believe that AI is going to pop. But my perspective is the winners of the previous bull market will very likely not be the winners of this bull market. And I do believe that crypto gaming was a narrative that was really pushed by many influencers, KOLs in the previous market cycle. To mention a few, Alex Becker, Elio Trades. And I know that those guys hold big positions or hold advisory positions in some of the projects they're pushing. So oftentimes there's, like the mass media, there's some kind of hidden agenda in the narratives that they're pushing. I'm wondering, what is your perspective? Since this narrative has already been pushed so much in the previous cycle, you still have high conviction that this will be a multi-cycle narrative?
Absolutely, 100%. And 4 years ago, when you were dating your girlfriend in Decentraland to test out a product, that was one of the only crypto projects that had actually something to show for at the time.
Yeah, that's right.
We are now 4 years later, roughly speaking. That means 4 years of development.
Yeah.
And a lot of these concepts and ideas that were just a bunch of concepts and ideas are now becoming real projects. And 95% of the projects with all these amazing ideas are already gone. They're already non-existent anymore. Many of them have already given up. So we have already went through that whole filtering process of a lot of these type of projects here. The real true OGs that are now in it to develop are now starting to come up with their alpha release or their beta release. That means that everyone is able to play a Web3 game. Now, on the other hand, we also have to understand that we need at least somewhat of a catalyst for it.
Yeah.
That's just the way it is. Like the last time the catalyst came was actually because of Meta, right? The moment Meta announced that they started to incorporate, NFTs, and then that the whole Web3 space blew up.
Right.
So we need something that can work and act as somewhat of a catalyst. Now there is a game that came out, and it was just a couple of actually weeks ago, and it's called Off the Grid.
Off the grid. Okay.
Yeah, and Off the Grid is kind of like your battle royale type of game, a little bit like Fortnite, but it's a little bit more for the the adults. Scenery, it's a little bit more professional, and it's a game that the top influencers on Twitch were all playing, and they haven't announced the word or mentioned the word crypto once.
Yeah, I believe the Twitch streamers really want to distance themselves from crypto at this point, right?
Exactly. So the new strategy is not to say, hey, this is this new cool Web3 crypto game, you can make a bunch of money. It's no, this is a real game, play it. If you like it, enjoy, talk about it. That's what's happening now. So instead of going with the intention of, hey, we are the best Web3 crypto game, and you can, buy some of our NFTs, and within no time you can make a bunch of money, forget about that one. Think about the understanding of real AAA quality games getting created on one end, with one of these games at some point, gaining mass exposure without the audience knowing it's a crypto game by default. And that's what's happening with Off the Grid. We saw this being the number one played stream at Twitch, where everyone was playing it. Web3 was not even mentioned once. What's happening now is they're going to release their token very soon, and then all these guys that are playing it right now suddenly realized, oh shit, I made a bunch of money with it.
Right.
And that could act as somewhat of a trigger.
Is it going to be an airdrop or something based on...
So they're going to release their project, their token. So they released the game before the token release.
Yeah, clever.
Which is very smart. Whereas a lot of old games that were doing it before released their NFT sales, and then they promised some magical game.
Which never happened.
So all these games are gone. Yeah, so there is already just a fraction of the best games left. Now that's one layer. Now the question secondary is, what about the integration of Web3 into Web2 games?
Okay.
Into current, gaming provisions. Because if one Web3 game does it, explodes, and actually starts pulling it off, you can see that Web3 games are starting to massively become popularized, and therefore you can see that Web2 games are starting to lag because people start to value their time more. That's just the way it is, because it's so money to make money on the internet these days. So why would you spend hours and hours of just playing a game and not making any money with it? The only people that are making money are the streamers.
No, and the companies themselves.
Yeah, and the companies themselves, right? That are entertaining the individuals. Now, the companies are trying to do everything in their favor to keep you playing and to lure you into their games. But we have seen in, for example, the MMO, RPG, the role-playing games that their subscriptions are actually dropping tremendously due to the fact that they cannot hold their user base. And that is because it requires such a large amount of time in order to succeed in that game. And if you can find ways to actually benefit from it by earning in-game, because of that reason, the incentives are much higher to stay and be involved. And I think that sooner or later, a lot of regular companies will start understanding the power of their NFTs, how you can integrate it. And by having a royalty on your items, you can make a bunch of money. It's not that you give all the power away to the users, and that's it. It's very important to understand that every single transaction, you pay 8% royalty or a royalty fee towards the owner.
Right. I'm starting to see, while you were explaining this, I'm starting to understand a certain dynamic. It's just like when MicroStrategy adopted Bitcoin and created the case study for a Bitcoin treasury, and when El Salvador adopted Bitcoin and created that case study, I do understand there's a disincentive for Web2 games right now to offer in-game crypto assets. Why? Because if you think about Fortnite, they will sell their skins to kids anyways. My nephew has his dad's, my brother's credit card connected to his account. Yeah. He buys skins every single day. And Fortnite collects 100% of all that money. Why would they want you to sell it to someone else and only make 5% of that, while now they're collecting 100%. But I do understand that if one game comes out and they become a massive success and a hype, and people within that game make money, and as a result, the retention of that game is much higher, then I think it's just game theory. You don't want to be left behind, because that's when I think the rest of the industry will shift. Yeah. And I think within all these industries, we need to see this pivot moment happen.
What people should do is they should go to Epic Games. They should download the Epic Games launcher where you can play Fortnite, and you should go into the store section, and you should go to the categories and then look at Web3.
Okay.
And then look at the amount of wish lists that you can find there, and see the difference in interest from the amount of interest from the Web3 section to the traditional, Web2 section, and how much it's growing month by month at this particular moment. And the question is, will this be another hype train? Maybe. But I do believe that the comparison of gaming 2021 and the gaming that we're going to see happening in 2025, I think we're going to see already a major improvement. And in the end, if you want to go really, really deep into the metaverse stuff and everything that's coming from, a technological standpoint, virtual reality, at some point in time, a lot more people are going to live in these type of places where they're going to be, living in some sort of virtual reality or something in that manner, where they have to start earning. Otherwise, they can't spend their time there. So we're heading there regardless. The question is it just way too early now to start already, being involved and get introduced to these type of cycles? But I do believe that based on what I'm seeing right now is that every narrative tends to have its shine at some point, regardless. So, betting on something which I believe in long term and potentially profiting from it short term, I mean, if you have the understanding of it, then why not?
Why not? Why not? Nice, amazing. We've been talking for a while. So I would say, let's recap it. We've discussed everything from smart money, dumb money, the institutions entering the market right now, BlackRock, MicroStrategy, Ethereum, altcoins, gaming, narratives. And I think hopefully the viewers watching this podcast, I hope you had a lot of food for thought, a lot to think about. I hope you're excited about all of the money-making opportunities in the market right now. The next 6 to 12 months are going to be absolutely crazy. Literally generational wealth making opportunities if you are disciplined and if you stick to proven risk management principles. And that's so important. Don't only chase the 10x, 100x, 1000x returns. Any concluding remarks, Lorenzo, that you want to share with the viewers of this podcast?
Honestly, I think we nailed it already. I think you guys just have to this time start subscribing to Mitchell's channel right now. It's incredible. Quality is top notch. So it's time to truly step up your game and just click that subscribe, like as well. And if you want to learn how to trade the traditional markets, but also crypto, and you actually want to know how to benefit from swing trading or anything in that matter as a part-time job at first, then follow your boy Lorenzo Crado.
Yes,
well.
Amazing. Right? I'm going to link you in the comments below.
Sounds good.
Guys, thanks for watching. You've heard it. Smash the like button, subscribe, follow Lorenzo, and let us know in the comments below what was your biggest insight from this podcast.
I'll see you in 6 months, and we'll talk about how gaming and the whole meme coin cycle went.
Yeah, that's going to be awesome.
We're going to figure it out.
I think it's a fun journey to reflect every once in a while and see whether we were right or totally missed it.
Sounds like a plan.
Let's do it.
Thanks.
Nice, guys. Take care. Peace out.
Ciao.